Warmly welcome all of you for the webinar organized by Entrepreneurs Lanka. Very good evening. Our topic for today is managing cash flows in the pandemic and macro outlook by a very well established professional in Sri Lanka, Mr. Senaka Kakiriwaragodage. You will hear more about him later. So Entrepreneurs Lanka is a registered non-profit organization that is aiming to help and support entrepreneurs across the island. We have commenced the platform here in Colombo, and our ultimate goal is to set up the platform across all districts in Sri Lanka. If you would like to know more about Entrepreneurs Lanka, you can follow us on Facebook, Instagram, or LinkedIn. And you can also reach out to me. My name is Thilini Ostwald. I am the founder and president of Entrepreneurs Lanka. So I hope you really enjoy today's session, and please feel comfortable. And there will be a Q&A session. You can ask your questions and enjoy the show. Thank you. Over to you, Shahan.
Okay, thank you, Thilni. So I will hand over the proceedings to our moderator today, Roshan, Treasurer of Entrepreneurs Lanka. Over to you, Roshan.
Thank you, Sohan and Thilni. So good evening to all of you all. I think you're all joining in from most probably from home because you're all because of the lockdown and all. So when we are running a business, I think as entrepreneurs, sometimes we might do our very best, but sometimes when we are looking at the external environment, because of external environment factor, our business would have got affected currently. But there are ways that we could overcome this situation and take it positively and do some changes and restructure the company and move forward. So to talk about that, we have got one of the best in the industry, Mr. Senaka, to talk about managing cash flows in the pandemic and macro outlook. And especially we might not want to know we'll want to know where the interest rates are heading, what kind of economic growth can be expected in the coming few months and the years. So before we start proceedings, I would like to invite EXCO member Tamashi Hettiarachi to give the introduction on our guest lecture today. Tamashi.
Thank you, Roshan. Hello, everyone. Today's guest is one of the greatest thinkers of our generation. He is a director of several portfolio companies managed by Emerald Sri Lanka Fund Limited, a private equity fund dedicated for Sri Lanka. He possesses wide-ranging experience in investment banking activities such as IPOs, debt, and equity placements, mergers, acquisitions, and corporate restructurings, advisory services, and project financing. Prior to joining the NDB Group, he also served as an engineer at Vertusha Private Limited. He holds a B.Science First Class degree in Computer Science and Engineering from the University of Monatua and an MBA from the University of Manchester, UK. He is also a fellow member of the Chartered Institute of Management Accountant, a Chartered Global Management Accountant, and a CFA charter holder. He served as a member of the CIMA Sri Lanka board and was a board council member of a CFA Sri Lanka. He has been a CIMA lecturer and a visiting faculty member for Postgraduate Institute of Management, University of Sri Jayawardenepura. In addition, he has also conducted several corporate training programs organized by the Sri Lanka Institute of Directors and Central Bank of Sri Lanka. It is with great pleasure that I now introduce to you Mr. Senaka Kakiriwaragodage, presently the Director and the Chief Executive Officer of NDB Capital Holdings Limited Investment Banking Cluster, NDB Bank. Over to you, Mr. Senaka. Thank you.
Thank you, Tamashi. First, thank you, Entrepreneur Sri Lanka, for inviting me for this session. It's certainly a pleasure to be here. Thank you, everyone, for logging on for this conversation. So the topic that I was supposed to discuss today is managing the cash flows in the pandemic. I think all of us had enough with this pandemic, but what to do? We need to live with it. And particularly if we are entrepreneurs, we run businesses, I think our challenge is multifold, because we are not only responsible for us, we are responsible for our other stakeholders, employees, maybe suppliers, customers, the government, and of course, it's a much larger responsibility with us as people who are running businesses, entrepreneurs. So great. So in order to help my topic today, I have prepared few slides. I mean, nothing in detail, but I thought of running that for a few minutes so that we capture the key issues today, prevalent today, and the subsequent conversation we could take as Q&A subsequently. So let me please take few slides on. I hope you can see my screen.
Yes, we can.
Yes, we can see. Yeah.
Right. So our topic is dealing with the pandemic, how to manage our cash flows during the pandemic. I thought of recapping some of the statistics with regard to the pandemic. Globally, there had been about more than 170 million infected cases and about 3.7 million precious lives have been captured by the pandemic, unfortunately. Of course, one silver lining in the whole issue is the vaccine, and probably one of the earliest vaccines to be produced in a certain disease. And we know since last year the vaccines are available. At least 4 vaccines are available, and globally over 2 billion doses of vaccines have been inoculated. So, which is a great advancement, I would say, in the mankind, in the humankind, in terms of developing a vaccine this fast. Turning back the focus in Sri Lanka, a tiny island, and of course we know there have been multiple waves as far as Sri Lanka is concerned. And as of yesterday, more than 200,000 confirmed cases, and the number of deaths, we record about 40 to 50 cases a day now, last maybe 10 days or so. And the total deaths are about 1,600, and just about 10% of the population is being vaccinated as of now. Hopefully we could push that number really fast. So what does this mean for the world and for us? And the world thought probably we are seeing an end of the pandemic with vaccination starting, particularly in the developed world. But particularly with India, I think the situation has turned back again. And as you know, few 100,000 cases are being reported a day and few thousands of deaths, mainly coming from India. And I think what we thought as a declining trend has been going up again globally. And in fact, mind you, this has been the pattern of pandemics in the past. Unfortunately, we are living through times, probably one in a century event as far as human history is concerned. The previous pandemic, the real big one, Spanish flu in 1918 to 1920, you may have, of course, read about it. About 500 million people had been impacted by that. That's roughly about 1/3 of world's population then. And the number of deaths, there's no real proper record, but the casualty rate is much higher, about 10% is what they assume. So luckily the medical field has advanced so much. We are seeing the vaccinations coming really fast, and as a result, hopefully we'll be able to keep this under control. But the nature of the viruses are, they mutate, they develop, and they turn into a different form. So still they might scrape through, and let's hope the worst is behind us, but who knows? We need to be prepared for the worst as well, which let's hope, let's not get there. But I think as people who are running businesses, as who are in the thick of things, it's important to be planning for the worst case as well. So you know the Sri Lankan numbers, let me not go through this again. Globally, I think the countries with higher vaccination has seen the declining of the curve or the flattening of the curve. But unfortunately, Sri Lanka has been following very closely the Indian curve, which is seeing a little bit of respite last few days. We see the number of cases coming down, number of deaths coming down. But mind you, all of us are in a lockdown. So while on one hand, we need to manage the pandemic, on the other hand, we need to manage the economies and the livelihoods as well. And what they say globally is this pandemic will widen the gulf between rich and poor. When I say rich and poor, the gulf between rich countries and poor countries, and also within a country with rich people and with poor people. The gulf will be widened, unfortunately, and we may have personally experienced similar situation, even among friends, family, and our close people. We would have seen that really. Imagine someone who has been earning a daily income, and their lives would have been, livelihoods would have been really disturbed to an unimaginable level. So, in this light, how the how the macro indicators are shaping up, how the governments are behaving, how the key economic variables are moving. So I would say the first noteworthy one is the interest rates. So usually governments have two tools to deal with any critical situation. One is fiscal policy, that is to play around with taxation, and two is monetary policy, that is to play around with interest rates. And globally, the governments world over has played around with interest rates, which is to play with the monetary policy. Globally, we have seen all the countries have dropped their interest rates to developed countries to near zero levels, like the America and the Europe and the UK, those countries. But even in countries, developing countries like Sri Lanka, India, Bangladesh, we are seeing almost all-time low interest rates, which we have never seen before. So if I take the Sri Lankan trend, and highest T-bill rates we would have seen is probably closer to 20%, about 18% just before the war, when the economy was in a real crisis. But our rates were north of double-digit rates, 10 to 12% over most of the last few years. But now with the pandemic, T-bill rates are hovering around 5%. And AWPLR, which is the indicative rate of the bank lending to prime businesses, which again had been around 12 to 13%, is now at about 6% levels. So the governments are responding by cutting interest rates. Why is that? In a pandemic, consumption will be low because people will not be spending money. So usually the governments reduce interest rates to stimulate an economy. However, there's debate whether it is even the right thing to do, because really sometimes the problem today may not be the money but mobility, because even if you have money, you don't feel like shopping, you don't feel like consuming, you don't feel like going to a hotel, or you can't even if you feel like, because it's a mobility restricted. So sometimes effectiveness of these kind of tools is not really there, because you might get cheap money, but what can you do with it? You can't spend that money, you can't go out, you can't go out to a restaurant, cinema, hotel, because the environment is not conducive. But the governments want to encourage spending. That's why you may have seen Sri Lankan government cutting the housing loan rates to 7%, which would have been double digit before the pandemic. So they want people to get into construction. The government has cut credit card rates, I think from a maximum of about 24% before the pandemic. Now that is maximum of about 18%, 1.5% per month. So they want you to spend, but the actual behavior of the people could be very different. One due to the social restrictions, the mobility restrictions, one due to you will be inclined to save because you really don't know what is coming. So one, by and large, very big global response has been to cut the interest rates. And as far as Sri Lanka is concerned, there's a very big variable affecting all of us is the exchange rate. And you see these curves will plot how the LKR, Sri Lankan rupee, has been moving against some of the key global currencies, dollar, pound, euro, and yen. And against almost all the currencies we've seen, we have depreciated by about 30%, 35% over the last 2-3 years. And the problem has been acute since 2019, where we are seeing one debacle after the other. Easter attacks and almost 2 years of global pandemic. So why the situation is little more critical for Sri Lanka compared to other countries? I have a few slides coming on later as well, but we were running on a very low reserves, foreign currency reserves position. Before the pandemic, it was about 7 to 8 billion US dollars, the reserves. But now it has dropped to about $8 billion. Why? Sri Lanka has been a country which has been throughout running a huge trade deficit. You may know our exports has been about $10 billion, but we are consuming much more through imports. Our imports have been around $20 billion. So we were always running a deficit of about $10 billion. And how this deficit was matched? It was mainly through remittances, the people who are working outside Sri Lanka and they remit money to Sri Lanka, and also certain services income like tourism. And you know, last 3 years, we didn't have any meaningful tourism income, which would have cost us $3 to $4 billion on average, which may have been about $5 billion if we were keeping up with the rate that we were maintaining in tourism. So it has created a big hole in the government's coffers, in the country's income. But on top of it, we have debt repayments. So I'll jump to that slide. So we have a lot of foreign currency denominated debt obligations. You would see in this chart for the next 5 years, starting from last year, every year we have to pay $4 to $5 billion of foreign currency loan repayments through international sovereign bonds and other bilateral and multilateral loans. So this is a big obligation. So when we are meeting this obligation, unless we get additional reserves, maybe through investments or additional loans, our reserve portion will keep dropping. And as a result, the $8 billion is now dropped to $4 billion. And next month, we have a payment of about $1 billion coming. So due to this situation, what has happened? The rating agencies, there are people who give you a certificate as a country. How much is your credit worthiness? Sri Lanka is a borrower. Our government has borrowed from overseas lenders. So someone is issuing us a certificate. How good are you? How safe are you? So who is issuing that certificate is the international rating agencies, likes of Fitch, S&P, Standard & Poor. So what is our rating? I mean, the rating is going on a scale. The best rating is AAA, but then you go down that scale. AAA, AA, A, B, triple B, and so on. So before the pandemic, we were B+. But now there were 2 rounds of downgrading. First after Easter tag, second in the pandemic. Now we are CCC rating. Unfortunate situation. Sadly to say, CCC is somewhat, I would call it, junk status. What do you mean? Any investor who is wanting to invest in a safe instrument will not look at our investment instruments like the sovereign bonds because it's too risky. How do you know it is too risky? Because the label attached to our bonds are CCC, which is very low in the ranking in terms of credit worthiness, credit quality. So as a result, people get panicked. So if you are an investor in Sri Lankan bond, you don't like to hear that news. You don't like to see that message, your bond is downgraded. So as a result, what has happened is foreign investors in Sri Lanka, both in international bonds as well as domestic bonds, Sri Lankan rupee bonds, and also in stock market. So these people have been pulling money out starting from 2019 continuously down to this year, 2021. So when people take money out, as anything under the sun, price of something is determined by demand and supply. Demand for something and supply of that. So if you take the Sri Lankan rupee, unfortunately, the supply has been high. People are selling that currency rather than buying. And as a result, we see this depreciation happening. And now the depreciation has taken the dollar, as you know, closer to 200 rupees from about 150 rupees, 160 rupees, probably about 3 years ago, right? So that is the situation all of us need to deal with. Because remember, Sri Lanka is a net importer. We import more than things we export. So all our essentials, oil, key food items, all are imported. So this exchange rate depreciation will show us in cost of living, and we'll see things going up in price. Already you may have seen the news, People are talking about potential gas price revision, electricity price revision, and some food inflation, so on. So connected to this would be what would happen to inflation. So last few years, we have been able to keep our inflation into single digit levels. But again, the most crisis times the Sri Lanka has ever seen, 2007-8, just prior to the conclusion of the war. You may remember oil prices were $140 a barrel. So there, at that period, Sri Lankan inflation was about 20% plus. I think if I remember it right, it was about 28%, the peak inflation Sri Lanka has seen. So if it is that number, we all can visualize the pain that will inflict on the society on cost of living. And inflation is something that might pick up with time because the money supply is high. You may have seen again, government is printing money. They have to do that probably to deal with the short-term issues. And on the other hand, globally also there's money supply. US has printed $1.9 trillion the last few months. And that money is coming into the market as well. What does it mean? There'll be cheap money in the system, not only here, globally as well. So which means it will drive commodity prices, oil prices, steel prices, copper prices, all of this will start going up. And as net importers, Sri Lanka will feel the heat of this inflation, particularly commodity inflation, coming into the system over the next few years. So it's really a double whammy as far as the government is concerned. On the one hand, you have to keep pumping money into the system, and you would have seen the government is giving this 5,000 rupee allowance, which may not be enough, but you need to still keep giving the needy of the society. And on the other hand, you need to watch against the inflation that could come with cheap money getting into the system. So at some point, we can expect inflation to pick up. If the inflation picks up, the government probably will have to increase the interest rates as well. Usually, interest rates lag inflation. And everything is not under government's control, as I said, because some of it will happen from the macroeconomy, particularly the commodity prices. The real big thing we need to watch out for is probably the oil prices. If it goes up, most of the cost here, starting from the energy cost, will go up, unfortunately. So it's a real tricky situation as far as developing economies are concerned. That is why they say this kind of pandemic will widen the gulf between rich and poor economies. So I think the real big equation as far as Sri Lanka is concerned is how long this will last and how long it might take for us to pick up with lost tourism income, because it is a real big hole that has created in the Sri Lankan GDP deficit, and we are, as I said, losing about $4 to $5 billion. By the way, if we had that, paying $4 billion would not have been a very big deal, because it would have just offset this dollar repayment obligations. So that is a real missing thing. And not only the pandemic, mind you, even the Easter attack caused us to lose that income even in 2019. So 3 consecutive years we are losing that big chunk of money as a nation, as a country, which has created a big dent in Sri Lankan government finances. So this is the net result. This is the government budget deficit situation. We have been maintaining our deficit around 5.5% until about 2016 to 18. This as a percentage of GDP. But with Easter, it shot up to 9.6, and this year we are expecting it to be double digit, 11% last year, and probably it will get closer to 10% as the pandemic still unfolds in 2021 as well. The government's medium target is to keep it under 5%. I think 4.5% is the target. But as you will understand, it will depend on how many other variables will play. Because this situation has resulted in lower taxation income to the government as well. Because companies are not making that much of money. If your income is affected, if your revenue is affected, you're not going to make profits. If you're not making profits, the government will have impact on corporate taxes. If the business revenue is low, the government will lose VAT revenue. If tourism is low, the government will lose certain tax income. On the other hand, the government has to spend on healthcare expenses, vaccination, none of them would have been in a normal budget. Some of these expenses, maybe those allowances to the needy in the society. So this has really doubled the deficit as you see in this curve. So it's a really tricky situation, to be honest, as a country, and it's a very difficult task in terms of managing this public finances. But I think first step of the solution is to come out of the healthcare problem. If we manage the pandemic, we will be able to get closer to the normal, which the developed countries are now returning to. US is getting closer to the pre-pandemic levels of economy. Europe is getting closer to pre-pandemic levels. India was there until it broke out for the third time. So I think we need to somehow keep that health problem addressed. That will be the first step of securing the economic problem. So what does it mean for SMEs, which is our target audience today? As entrepreneurs, as people who are running the businesses, what is the impact on us? So we can get into detail in a Q&A session, but I'll in a nutshell try to summarize that. So obviously, the pandemic has resulted in revenue losses for most of the businesses, particularly if you are in contact businesses. So what are the contact businesses? Particularly the business that deal with people, say restaurants, salons, and some sectors like tourism. You are in service business, you are in contact business. Transportation maybe. And some of these businesses would have lost revenue, sometimes 50% to 100%, closer to that. Because if your business is shut for a certain time, what can you do? Your income will be pretty much lost significantly. However, you may not be able to cut the same level of expenses due to various reasons. For example, you may need to still carry some stuff. You may still need to pay a certain amount of rent, certain overheads. So the loss of revenue may not exactly be proportionate to how much of your costs you can reduce. So still, you may continue with certain overheads, which will result in negative cash flows. Cash flows is very key in the current situation. So if you have negative cash flows, what does it mean? It is like the government situation. You have to eat into your reserves. It's like a family situation. Your income is less than your expenses. You need to eat into what you have saved up to now. Or if you haven't saved anything, you need to start selling things. So you need to manage the negative cash flows. And if you cannot sustain the negative cash flows, the eventual situation may be depletion of reserves. To overcome that, you might need to sell certain pieces, or, in the worst case, eventually, sometimes it may lead to closure of businesses. Look, Sri Lanka exposure to tourism is not that large, but certain countries like Indonesia, even in Europe, countries like Greece, where tourism could be 15% of the GDP or 10% of the GDP in a place like Indonesia. And that kind of places, the impact is much more. Because if you go to a place like Bali, everyone is living on tourism. If you go to a place like certain Greek island, everyone is living on tourism. So for them, it is devastating. I think Sri Lankan exposure was only about 5%, luckily. And if it was a bigger number, like the case of Thailand, Indonesia, or even in Europe, a place like Greece, impact would have been much more devastating. But unfortunately, what we lack here is the government's ability to support the SMEs. In a place like US, the government send you a cash check to sustain your businesses, to pay your salaries. For everyone unemployed, the government was taking that burden. But unfortunately, given our situation, our reserve situation, the government is not in a position to support. So the problem becomes our own. So how we may deal with this situation? And of course, the solution will depend on which segment you are in and what can you do. But generally, if I try to capture some possible solutions, it will be very critical that you have an idea what is your cash runway, how much cash burn. It is a very critical term for startups and SMEs, I would say, in the current environment. How much cash you will burn every month, probably every week, because every day is sometimes critical. So you need to have a very good idea. It is not about profits. We should not care how much profits or losses you are going to make, but how much cash you are going to burn is a really critical number in the current environment. And if possible, you should try to raise your cash buffers. Get any possible cash that you can lay your hand into, which could be a loan, which could be a grant, which could be a government assistance, which could be a borrowing from a friend, family. Please get hold of and try to strengthen your cash buffers as much as possible. However, I think you need to be a little innovative in the current context as well. Businesses need to pivot their business models. If you are running a restaurant, you need to think about doing delivery services, shifting to an online delivery model. If you had a physical store, think about getting into an online model where you can still sell something. It may never be what you used to do earlier, but it will help you to earn something, reduce the cash burn. I think one good example is industries like apparel. Nicely did that when the demand from Europe really depleted in early 2020 or throughout 2020. They pivoted the business model. They moved into healthcare production like the mask and the PPE and so on. So it's helped them to fight for another day, reduce the cash burn. I think all of us have to do, if you're particularly running an SME, see how you could pivot this business model. But sometimes it may mean you might need to downsize. Because you can be optimistic, but sometimes it could be stupid to a certain extent because certain variables may not be in our control. So sometimes understanding the problem early is really helpful rather than being really optimistic and fighting, which is essential quality of an entrepreneur, but being realistic is probably even more important quality at this time. So think about downsizing if required. It might amount to cutting some salaries, cutting some overheads, giving up locations, giving up certain rent expenses, negotiating with landlords, and making your operations as efficient as possible. One good thing about the pandemic is I think most of the companies have now found of doing things more efficiently. I think earlier, if you look at a business, how much time we would have lost on meetings, transportation, travel. But now we have used to communicate like this, right? How many Zoom meetings, MS Teams meetings you may be getting into. And we could have done that in a non-pandemic time as well. But good thing is we've been able to identify such methods of delivery, such methods of operating businesses. So make it as lean as possible. Reduce your overheads. However, worst case, you might not need to be emotional, make some hard decisions if required. It may amount to sometimes sell part of your business. It may require to sometimes sell the whole business. Unfortunately, depending on the gravity of the problem, it may unfortunately amount to close down as well. It is better if you are a loss-making entity rather than closing down when you have lost everything. When you have lost all your reserves, sometimes it could be a much more prudent decision to close it down early and save something for you. So I'm giving a full spectrum of possible solutions, and where you want to fit on will depend on what the nature of the business is and what the nature of the problem is. So essentially, this is quick recap of my thoughts on the topic and what is happening around us, and happy to get into Q&A. Thank you.
Yes, it's a very wonderful session. And already there is few questions coming in. I'll just start with one question and then
Excuse me.
Yes, yes, sir.
Senaka, can you on this share screen? Okay.
Sorry.
Right. So there are a few questions coming in. We'll start with one question from the audience, and then thereafter later on we can give the audience directly to ask questions as well. So the first question is, what's the advice to present facilities of rescheduling, and what's the best period you will advise if the turnover is dropped by 50%, and what's the best rate to request from the bank, and is it possible to request in a structured way?
Yeah.
I think he's
So I think most of the businesses have gone for restructuring the loan facilities and rescheduling the loan facilities. In terms of the rate question, I think government offered 4% working capital loans under various schemes. I think Saubhagya loan scheme. Unfortunately, banks may not have availed it to all the businesses. Banks also prefer to take lower risk, unfortunately, in these circumstances. But I think the government announced that 4% scheme sometime back. And I think there was a circular a few days ago, 2-3 days ago, where the banks were asked to give concession rates for the business affected by the pandemic. So, I mean, what is the rate? I think it's definitely is to be negotiated, but I think under the previous scheme, the rates of 4% was available to affected businesses. So in terms of how long the restructuring should be, I would say it is not really on the revenue, but it depends on your cash flow generation. But you need to estimate how much is the cash generation now, and under certain assumptions, how long will it take to recover those cash flows. Mind you, it is a little bit of foresight is required, fortune telling is required, which is a very difficult thing, right? But I think it's important to keep some buffer. For example, if you think you can pay 100,000 rupees a month, so probably it is safe to assume that you can only do about 60-70,000 because you never know where it could go wrong and what are the additional requirements may come in. So I would say you try to start doing a cash flow forecast, capturing multiple revenue scenarios and multiple cost scenarios, and based on that cash flow, see what is your debt obligation, what can you meet comfortably as far as debt is concerned. And then of course you go and have a chat with the bank. Look, this is how my business is affected. I'm sure they will be able to understand the situation because I'm sure you will not be alone in this case. Many businesses would be going through that, and depending on that, come up with a plan. So I think it's important to be honest here and also to tell them this is what I'm doing in terms of managing the situation. I think if you can lay down, these are the measures I take to cut my cost, improve my revenue, pivot the business model, make it a little more efficient. I think that will give some comfort to the bank. Sometimes into the equation, you might need to take certain asset sales, as I said. Sometimes you might need to give up on certain things, unfortunately.
Yeah, so that's what hard times will require hard decisions to be made. So
exactly.
Mrs. Senaka is saying. Senaka, there's a question coming on saying, does the savings under these circumstances prudent rather than investing?
Okay, right. So I think one challenge of low interest rates has been the income on savings has also been going down, right? I think maybe about a year ago, FDs would have been attracting closer to 9 to 10%, but now it is half of that, 4 to 5% probably 1 year FDs might yield you. And if you are a fixed income earner, situation is even worse, because if you are a pensioner or living on, let's say, EPF income, and your income would have been halved. But I think you need to really factor in the risk side of the equation also. It is not a one-sided equation. So we understand the returns from savings is low, but you need to have a fair understanding about what are the alternatives. One definite alternative is, say, stock market, or sometimes it could be assets like real estate, or I don't know whether any one of you are dealing with assets like cryptocurrency, which are different possibilities. So stock market also, I think if you take year to date, market has been up by about 11% maybe from beginning of the year to date. But end of January, we were up by 28%. So from there, we have dropped by about 15%. And I think we dropped to about 6%. In the last month or so, we are seeing about 4 to 5% increase. So you need to understand the risk involved, because none of them will give you guaranteed returns. So investing is fine, but as long as you understand your risk appetite and be prepared, it may go down as well, which may not be the case for certain fixed income. If it is 4%, most likely you will get the 4%. But there may be another alternative investment where you have a chance of earning 15%, 20%, but there's a possibility of you losing 10, 15% as well. I think it's very important to understand the risks involved. I mean, to take that cryptocurrency as an example, they lost about 50% over a week. And that is the nature of the investment instruments. I think it's important that you take a portfolio approach, and it's important that you understand how much you can lose as well, because definite aspect of investing is understanding the risk as well.
Right. Audience, I think Temia has a question to ask directly. Temia, you can ask now.
Yes, thank you, Roshan. So, Mr. Senaka, that was a very interesting presentation that you did.
Thank you.
I had no idea about finance until this presentation. So my question is, since you brought up cryptocurrency, is it legal in Sri Lanka to use cryptocurrency, and how long will it take the banks to adapt to cryptocurrency?
Yeah. Look, I think if you ask me, the honest answer is, I think for any foreign investment, you need central bank clearance. So technically, it may not be something very legal unless you have got the prior approval. And I don't think central bank giving that prior approval, although there are various trading platforms on cryptocurrency. So I would say strict answer is no, right? And how long will it take? Various regulators have been responding to it differently. You may have seen Chinese central bank has been banning the cryptocurrency very recently, and which led to the crash of the cryptocurrencies as well, the global markets. But certain currencies, I saw yesterday, countries in South America, El Salvador, I think, has made it permissible. Some Scandinavian countries like Switzerland, Sweden, those countries are allowing it as a legal tender, cryptos. So I would say it will completely depend on the regulators' attitude to that. But please understand, this kind of cryptocurrencies will take the central bank's power away to a certain extent. Because one of the biggest luxuries central banks have is that they have the authority over money supply, what they can do with money. But if there's an alternative currency, to a certain extent, central banks will lose that power. So it will always be a negative factor in terms of adaptability of or popularity of cryptocurrencies, I would say.
Thank you, Senaka. So we have one question. I think entrepreneurs like practically faces this, that sometimes when they want to raise finance, they don't know some other alternatives are available. The question is, what are the options for SME to raise finance? Like other than bank loans, how can their entrepreneurs raise finance?
Right. So I'm not really sure what is the definition of an SME. I mean, for our purpose, when we deal with investors, we define SMEs as companies less than 1 billion revenue, but that's fairly large in Sri Lankan context, right? And another definition of SME would be based on the number of employees. If your employees are less than 50, usually people call it an SME. So it all really depends on your SME definition. But I would say if you're about 100 to 100 million plus, even raising equity could be a possibility these days. Why do I say that? There may be certain high net worth investors, high net worth individuals who may, the same question that was asked earlier, who may be fed up with the fixed income returns and who may not mind taking a slightly higher risk. So at this point, they may be thinking of investing in a business, investing in a shares of a particular business. So you may be able to think about certain equity raising as well. Even if your revenue is low, say you are a startup, but if you have a wonderful concept, wonderful product, say a new IT concept, there may be a possibility of raising a little bit of equity on that front. But when it comes to bank loans, I think the bigger you are, the chance of getting a bank loan will be higher because the banks like stability at this moment in time, but sometimes they might look for collateral as well, as we all know. So in terms of alternatives, I would say you can think about a little bit of venture capital, private equity kind of money, not really from institutions, but from certain individuals, I would say. High net worth individuals, depending on how attractive your business, what kind of growth you can give to an investor, and what kind of innovative business model you may be wanting to promote. So there may be a possibility of raising a little bit of equity. And seriously, I think M&A, mergers and acquisitions also could be a possibility because as you know, the bigger businesses are getting cheap money. And I mean, look, let me not name companies, but you would see some of the listed companies on stock exchange, their earnings have significantly improved over the last year. The main reason is the interest rate reason, which I mentioned. If you were paying 12%, now you are paying 6%, your interest cost is only half. And some companies have large amount of loans, and this may have reduced the interest bill substantially and added a lot of profits for these companies. So this increase in profitability might warranted them to look for new acquisitions. They are looking to grow their businesses. So if you are a small business, sometimes there may be a bigger player in your industry who are willing to buy a stake, sometimes a controlling stake, which may not be a bad thing necessarily for a small business given the current environment. So very broadly, I would say these could be options other than going for debt financing.
Okay. Thank you, sir. So there is like many questions coming in. So maybe we'll open it before we open up to the public. I mean, our viewers, we will go one question and then go. They say one person asked with regard to the port city that everybody is speaking about. What would be the short-term, long-term economic implications of the port city project and how it will help to achieve 8,000 per capita dollar GDP in 2030?
Right. So I would call port city is a bit of a medium to long-term project, right? So I think the first phase would be certain construction has to kick off in port city. I think you might know several office complexes, businesses, international schools, hospitals are planned in port city. So I think it depends on the investor appetite. I would say initially it will have a positive impact on the construction sector. Then depending on the business that come on there, you will see some employment hopefully being created starting on the upper end of the society, probably more on the financial services to start with, and probably will go into things like leisure, healthcare, education as the related businesses come up there. And then in the long run, when there are expats, employees coming, when there are tourists coming into port city, there will be this spillover effect on rest of the economy here. For example, someone may come there, an expat employee, but he will start traveling to rest of the Sri Lanka, maybe when he gets some free time. So those will be more longer term implication. So how I see this is, first, FDI as an investment may come, and then it will boost the construction sector. In the medium term, we will see some employment creation. I think the government's target is about 80,000, if I'm not mistaken. So those will be more skilled jobs. And then hopefully we'll start seeing the spillover effect, which will come into the rest of the economy, which could be in leisure, which could be in trade, transportation, and rest of the sectors in the economy.
Okay. The question was answered. Let's open up to the our participants. If you all have questions, you could ask directly. But there are so many questions coming in. We'll give you the participants few questions to ask, and then we'll take it. If you have any questions.
Hi, this is Pujita. I'm sorry I cannot open the camera. I just want to get some insight in terms of these money market instruments, which is promoted by non-bank, I think, other financial institutes. Is it a guaranteed investment? Because when you talk to them, it's a bit volatile. They said we cannot guarantee, but we say that average return is around 7%. What is your thought? Would you advise for a normal person to invest in this?
Sure. Money market fund is a pooling vehicle. Let me explain that. Money market fund will collect money from multiple investors. So I'll use a simple example. If there are 1,000 investors with 1 million each, you will have a 1 billion rupee money market fund. Then the fund manager will invest those monies in different instruments. So money market funds, first you have to figure out what money market fund is that. I would call it, there are about 3 different money market funds. First one, the lowest risk, the money market funds that are investing in short-term instruments. So usually these are less than 1 year instruments. And the main thing is it is like a savings account where you put your money in a short-term instrument. Then you have what we call income funds where you invest in fixed income, that is like FDs, but more than 1 year instruments, typically between 1 to 5 year instruments. And at the other end of the spectrum, you have equity funds where the money is invested in stock market listed companies. And of course, there can be blended funds where certain percentage will go to equity and certain percentage will go to fixed income instruments. So I think return is one thing. You need to understand where these investments are made, because as you all know, risk and return go hand in hand. I mean, we have seen guys like Sakwiti, right, who had been promising 30%, 40% returns. And of course, later we realized the risk was something that was not discussed that much. So similarly, I would say the biggest risk in a money market fund is where the fund manager is deploying these instruments. my institution, NDB has a money market fund under us. So I think one thing that we are consciously doing is our investments are always made in investment grade securities. So, I mean, let me not go into details of that, but usually, as I said, there are credit ratings of certain instruments. So investment manager has to decide, this is the credit risk we are going to take. Below this, we are not going to take the investment risk. We will not investing in instruments less than this credit rating. That is one thing. The second important thing is liquidity. Because if it's a money market fund, it should be liquid. It should be like your savings account, where you put your money and whenever on demand, you should be able to take your money out. So one thing that you have to ensure with the fund manager is, does it have the adequate liquidity? Otherwise, you can't compare with a savings account. If you put your money in a savings account, you know on demand you can take your money out. So you have to check that what is the liquidity situation of the money market fund. Because otherwise, I can invest in a high return instrument which may not be very liquid. In that case, if you ask me money back, I'll find it difficult to return your money. So I would say money market funds, you have to look at two things mainly. One, the return, two, the risk. Risk mainly in line with where the monies are invested. And the second thing is liquidity. So typically, a fund manager should assign certain percentage for liquidity. That is because if an investor asks for money, he should be able to return that money from that liquid cash. So if I have that 1 billion fund, maybe 10% of the money will be in just cash. Because if someone asks, I should have the liquidity to return the money back to the investor.
Okay, thank you, Senaka. Thanks. Thanks for the clarity.
No problem.
From the audience, we can take a question. Jeevan, yes, Jeevan, you can ask your question.
Mr. Senaka, good evening. Thanks for the session. Actually, I'm also banking with NDB, my main bank is NDB, Pelavatta. I've been supported by NDB a long time. So just I want to know is now at this moment, at the pandemic situation, now what we are facing, the banks are invited us for reschedulement. What now? If you just said about the Saubhagya loan, is NDB tied up with Saubhagya loan or not?
I think we were earlier. I think the government has given new instructions few days ago. So I'm not too sure whether it is called Saubhagya or not under the new scheme. But I think few days ago, 2-3 days ago, there was a new circular from Central Bank.
Also, I just raised a question from you, Mr. Senaka, asking, is the loans are being able to freeze for a certain period as a pandemic?
I think it would depend on the bank's assessment of how the individual business are affected. And if there's credible story that your business is affected, I think, for example, let's say you're running a restaurant, I think there's no reason why the bank should not avail that.
Okay, thank you very much for your time and the ideas given to us. Really
Pleasure.
appreciate it.
Thank you.
Thank you.
We can go for another question from the audience.
Roshan, will you give me another opportunity? I'll just what I text, I didn't ask again.
Yes.
Yeah, Senaka, do you think that settling debts with your saving in the current condition is advisable, rather rearranging your finance or borrowing more money?
If you want a yes/no answer, I would say no, right? Because the current interest rate environment is low. So it doesn't make too much sense to settle debt. If you ask me an individual advice, I would like to borrow as far as I have the capacity to repay. Because usually the next round, what is most likely to happen is the inflation will kick in and interest rates are likely to go up. So if you could lock in your interest rates, say at, I'll give an example, say at 7% and deploy that money in a project where you can get 10%, technically you should be up on the deal.
Okay.
But it all depends on what investment opportunities you have with your money. Generally always there will be a spread between your savings rate and the borrowing rate. If you have absolutely nothing to do with the excess money, then of course you are paying an incremental interest rate by having borrowed money versus saved money. But if you think you have a chance of deploying that money, I think probably using that low interest rate would be a more sensible thing. So you would see people invest in real estate around these times, and we have seen that globally. Places like America, Australia, real estate values have significantly gone up. It naturally happens with low interest rates.
Okay, right. Thank you.
Roshan, if you don't mind, I
There
can
was
pick a
one
couple of
question that
questions on the chat box.
yes, yes. Yeah.
Yeah,
If it's
so
okay,
I'll
convenient for you.
provide some quick answers. Uh,
Okay.
what would be the impact on quoted public companies? Twofold. On one hand, you will lose revenue because of the pandemic, because you are operating below capacity, most of the businesses. On the other hand, your borrowing costs would come down. So which one is bigger will depend on what is your business. For example, if you are an export business to say Europe or US, I would say your revenue will not be affected that much because of the pandemic, because those countries are coming out of the pandemic. So there will be little effect on your revenues. But on the other hand, the declining interest rates might have saved you a lot of interest. So your profitability can significantly go up. But on the other hand, if you are in a domestic business, the lockdowns, the mobility restrictions would impact your revenue. Your revenue will drop. So it may be bigger than your savings due to low interest rates. So for that kind of a business, the impact could be negative. So I think you need to take case by case. How the small investors be affected? I think how you will be affected is where you have put your money. And generally, due to the low interest rates, usually, I think I mentioned the same thing in the earlier question as well, asset prices are likely to go up when the interest rates are low. It could be equity, it could be real estate, it could be commodities. We see everywhere. Asset prices tend to go up with low interest rates. So therefore, if you put your money in the right asset class, you might see the benefit. In fact, we saw that benefit last year in Colombo Stock Exchange, right? The index went from about 4,000 in the bottom to about 8,800 at the peak. So that's more than 100% index improvement. Some of it could be little running on the hype, but even if you normalize that, I think there would have been a good 50% increase in most of the counters from the bottom to the peak. And I think that is what you normally expect. But now probably some of the pricing has been factored in already, but still there may be some asset classes, some companies where still you might see an upside. So I think you need to look at individual case by case. So I'll quickly take the other questions also. Do we see the loan NPA rates increasing? Theoretically, yes, because I mean, longer the pandemic, the more trouble the business will be, right? It has to be, because it can't be positive for a business generally. So generally, longer the pandemic will continue, I can expect NPA rates to be trending up. Will it have the ripple effect to the finance industry? So I think it depends on the extent of the duration, I would say. If it is a short-term thing, couple of months, probably it will not affect the industry too much. But if you're going to see third wave, fourth wave, fifth wave, and a virus that may not respond to a vaccination, who knows, right? So then the situation could be quite bleak. Not only Sri Lanka, I mean almost everywhere. I think I answered this money market question earlier. Why private equity is not supporting SMEs? Okay, a private equity investor will look at mainly three things. One, the governance levels. Unfortunately, in Sri Lanka, the governance level of companies are not that good. When I say governance levels, having the accounts on time, management information, are the accounts audited, are you paying taxes? And that side is not that great, I must say, as someone who has been in the industry. And on the other hand, they will look for exit rights. And what do you mean by exit rights? The private equity investor has to get out of the investment. They want to return their money to the investors. And how do you exit? Either by selling the investment, selling the business, or listing the company. These are the typical exit routes. So in Sri Lanka, you know, I mean, we haven't had too many IPOs over the last so many years. So the exit has not been that great for private equity investors. And also the Sri Lankan investors' mindset is they are not willing to sell the businesses as well. Compared to a place like US, you might see in the US, many guys come out as serial entrepreneurs. You invest in a business, build to a certain level, and you sell to a bigger company. And how many businesses are bought by the Googles, the Yahoos, the Facebooks almost every day, and the pharmaceutical industry? Small businesses are built and then sold. The entrepreneurs are starting another business. So this is something that I've been telling. Although majority of our community are Buddhists, so sometimes we are so much attached with things that we have, right? And I see entrepreneurs and the businessmen absolutely no different, and they want to hold it forever, and sometimes they want to keep it for the next generation and the grandchildren as well sometimes. And that is not the greatest ecosystem for private equity or venture capital. So these guys have to come in and get out, and getting out is not made any easy by this kind of entrepreneurs, unfortunately. Would you recommend to invest in Europe, North America, and real estates now? Okay. If you have a mechanism, I think you might need to still find places, right? For example, it is not a generic answer. For example, I think one phenomenon probably in America is there's a big demand for suburbs, because people who have been living in cities like maybe New York or California, now with more work from home concepts coming in, now the demand is more for suburbs, where you have a bigger house, where you are running a office from home, and where you spend more time at home rather than at office, and therefore you need probably a bigger garden, and suddenly the demand may have shifted from a real metro to a suburb. So still within even the North America, Europe, you need to pick the right area, which may not have been the traditional metropolitan cities, but could have been the new emerging suburbs, so to say. There's a question about a particular IPO. I think it's not appropriate for me to comment on a particular company, right? And anyway, there's a conflict on my side as well. So let me not take that question.
Yeah. Any other questions from the audience you want to ask directly? I think we have answered most of the questions. Anything we missed?
Hi, Senaka. Can I ask a question? Hi, regarding the cryptocurrency, you see there is a significant volatility these days. Bitcoin went to 63,000 and today it's at 32,000. And all the other cryptocurrencies is dropping, and there is so much of volatilities. So do you think it's a feasible investment right now?
So we talked about the legal feasibility earlier, but in addition on the economic feasibility, I would say it's a very volatile instrument. I think anyone who's in that game should understand the risk involved is so high, because there will be many external factors like regulation, or the regulation is going to deal with, and you would have seen a lot of hyping up also happen. Elon Musk tweets and certain cryptocurrency goes up, and he says suddenly Tesla is not accepting it, it crashes. So there's a lot of, I would say, let me not use the word pumping, but I think there had been a lot of hype-driven behavior of crypto prices. I think it will be too volatile unless you really know the game, and which I'm not too qualified to comment on. But one thing I can surely say is a very high-risk instrument.
Yes, like Senaka said, it's high risk, high return. So
I don't mind anyone in the forum responding if possible.
Yeah. So high risk, high return investment. Anybody else would like to go for one more question?
Mr. Senaka, this is Anil. And just want to ask a quick question. So basically, when you say entrepreneur, we mostly use PayPal and kind of things for the payment, like Amazon or eBay if we are selling from. But the unfortunately, it's not legal to make a eBay or PayPal account in Sri Lanka. So I don't see that nobody finding a solution. I think now this is the only option we have to get more money from abroad. So is there anybody because on your level, is there anybody looking for a solution right now? Thank you so much.
If I'm not mistaken, I think the central bank has been looking at giving approval for PayPal. I'm not too sure about the latest situation, but I definitely know they were in consideration of approving it.
Okay, thank you so much for your.
At least in the process of evaluation.
Thank you.
Okay. Do we have one more question? Is it okay, Senaka? Can we take one more question?
I'm okay.
Maybe there was one question that is coming in. Investing in new digital currencies is the best thing we can do, not in Bitcoin. Some of new currencies are now in Bitcoin. So I think one audience have commented on that. Any more questions? We can take one more maybe from the audience.
So there's one question where the Sri Lankan businessmen are always looking at profits, not on cash flows. But I think I have to say categorically, particularly in the times like this, cash is the king, and cash is the ultimate deciding factor, because profits is governed by things like depreciation, right? Which is not even relevant because depreciation is dependent on your past actions. You invested and your accounting depreciation coming in. But cash is the real thing that is under your control, what you can manage these days. So, I mean, a company can live without profits for so long, but if you can't live as a company without cash for too long. I mean, the greatest examples are like the Lehman Brothers, the investment bank that collapsed, started the collapse in the 2008 financial crisis. I think the previous year, it was generating few billions of profits, previous year. But the next year, it couldn't meet its debt obligations and it just went bankrupt. So you may have had decades of profits, but can get wiped out in a couple of weeks of negative cash flows, depending on how big the problem is.
Okay. So one more question. Many businesses have got affected because of the COVID pandemic. What are the new sectors you see that will have growth in the future? New sectors, maybe where entrepreneurs are moving into.
Okay. So look, let me give a generic answer. Of course, there can be other sectors or even business within these sectors will not do that well. But if I give a few generic answers, so definitely technology-based businesses will have a bigger growth because people are looking at adapting to the current situation and technology as the means of taking their businesses to the customers. Delivery services, more efficient ways of distributing things, and even things like education, entertainment, and the main consumption mode is through tech, right, these days. I mean, this is a good example. If you can consider this as an education session, earlier you would have had this in a physical room, but now we are doing it over technology. So technology, not as a tech company, but sometimes as enabling business. It could be enabling education, enabling entertainment, enabling business. It could be enabling many things, but technology as a facilitator, I would say. Then I see definite growth in agriculture because people will be focused on food security. Because with the pandemic, people would have seen disruptions to supply chain and how important to secure food security and how important to be self-sufficient in certain cases at least. So things like agri-tech or more innovative ways of doing agriculture, more sustainable ways of doing agriculture, I think will definitely be a theme to pick up. And I think we might see, unfortunately, oil prices going up again. So things like renewable energy, energy efficient technologies, and it could be new energy sources. I mean, we may be talking about hydrogen energy. I mean, these may be very high capex and R&D driven businesses, but even in Sri Lankan context, maybe renewable energy could be something that probably will get the focus back, because I think the commodity inflation, unfortunately, is going to come over the next couple of years, and we need to find efficient ways of doing things.
Okay, thank you, Senaka. So there's one more question. Let's see if they can answer it. Other than credit facilities from the supplier or clean import loan facilities from the bank, what are the other alternatives to manage the working capital, especially the stock purchase?
Okay. So one solution could be something like factoring, where you use your receivables as collateral and try to arrange some money. And I think the supply credit and the bank facilities are already mentioned. And if you look at capital markets, some available instruments could be things like commercial paper, but very small companies may not be able to do such things. I mean, you need to be of some scale for you to do a commercial paper. But maybe a medium-sized company may look at those options as well, factoring, commercial paper, I may say.
Okay. Thank you very much, Senaka. We have been firing up questions left and right too. Hopefully we are not this. I think we have answered most of the questions. Shall we just leave one more for the audience if it's available? And if you have any questions? Right. Seems I think we have answered most of the questions that's possible. So as good.
I think there's one last question, Roshan, by Sajad.
Okay, let me read that. in order to mitigate the currency and interest rate fluctuations and the risk, while Sri Lanka is not optimizing the hedging options. So I think probably the question is from a country point of view. When you say interest rates, I think most of our borrowings are on fixed rate. If you take sovereign bonds and all that, they are fixed rate loans. So I think now anyway the yields are very high. Looking at any of these hedging mechanisms, probably it is too late now, because I think our yields are very high, and anyway anyone to give a guarantee or a swap or any instrument, probably they'll be a little hesitant given the current situation. So probably that is something probably we have expired time horizon as far as interest rate hedging is concerned. Currency hedging, look, I think we need to restructure the economy. We need to get to that natural hedging. I mean, as long as we run this kind of trade deficit, 10 billion exports and 20 billion imports, I mean, the problem was only a matter of time. The moment we ran out of that flexibility with tourism income missing for a couple of years, and then we lost that battle. So I think it's very important to restructure the economy, where we drive the exports up and try to control the imports, which is now the government is trying to do. But unfortunately, we're trying to do that in a crisis situation, where we don't have too much room for error. Because if the tourism inflows get delayed by another year or another 2 years, we'll be getting into more reserve depletion, because it is not easy to bridge a gap of 10 billion trade deficit overnight. So it will take time. I mean, these are structural reforms as a country we should go. So I think we need to get into a natural hedging mechanism rather than a synthetic hedging mechanism, which is the reform, which are the reforms. And sometimes reforms should be internal, and probably things like privatization should come, because we are running that kind of budget deficit. Why the budget deficit is high? Because the government expenditure is high. So you have to find a way of curtailing some of the expenditure, and it may mean some drastic measures like privatization. And you know, they've been talking about things like IMF program. So if you ever go to IMF for assistance, this will be one of the first few things to come.
Okay. Right. Thank you, Senaka. So for us to end the proceedings for today, I would like to hand over to our EXCO member, Kumudu, to give the vote of thanks.
Thank you, Rashan. Good evening, all of you. On behalf of Entrepreneurs Lanka, want to deliver vote of thanks speech. I'm really thankful to our EXCO team for giving me a chance to deliver this vote of thanks. Ladies and gentlemen, I want to thank our guest speaker, Mr. Senaka Kakiriwaragodage, for his active participation in our webinar today. Mr. Senaka, you truly make this day full of knowledge for us. Your deep and intellectual way of imparting knowledge has added to the glory of this webinar. Today, we have got a lot of information which will truly help us in our business. We have no words to offer gratitude for your valuable presence in this webinar. You gave deep insight into the topic and revealed some interesting facts. It was really informative webinar in true sense. I'm pretty sure precise knowledge you gave us will definitely help us in our business. This webinar was truly worthy. Senaka, you really motivated us to gain more and more knowledge and work hard in our respective fields. Once again, I would like to thank Mr. Senaka for taking out time from your busy schedule and enlightening us with knowledge. I would also want to thank for our president of Entrepreneurs Lanka, Ms. Tilini Oswald, and the EXCO team for organizing this webinar. The last but not least, thank you so much for EL members and the audience for attending with this webinar. Have a great evening, you all, and thank you so much.
And thank you for inviting. Pleasure to be here. Thank you.
Thank you.